Good morning, everyone, and welcome to the European crossover webinar. Um, had about a 15-second delay here. Apologies there. My stupid Google Fiber went down. I'm seeing one of the other guys in the chat room. He says his is down too. Fortunately, I keep a backup, which is obviously it's much slower, but I keep it as a backup just in case. And things that's frustrating, things happen. But this is the second time in a week less than a week that Google Fiber's gone down. And actually, it's been down for now. It appears like over 2 hours or maybe almost 3 hours. But anyway, bear with me. So anyway, it's just a little bit slow getting things set up. Different computers, you realize, oh, wait a minute, the internet's not on that one. Let me switch it around. So that's why. But anyway, let's go on and move on. Hang on a second. Oh, my goodness gracious. Okay, so we are seeing the euro come under some pressure here. I mean, it's been weaker. One of the things we covered, or I did a little bit of analysis, how it recovered. But one of the things that I had mentioned, I did the FX Daily Roundup on behalf of Blake yesterday because he was at the Phoenix Open with his wife and friends, enjoying a well-deserved day off. But anyway, nonetheless, we saw a little bit of a bounce here, but we'll take a look at it here on the daily. So we got this dip, and I said that, hey, we're looking, pull up the, whatchamacall. Like I said, a little bit foot slow here with what all happened. But anyway, so yesterday we had the euro dollar support here at 992. Actually, that's been since even the day before that. And we did come down there. But my concern was, and here's the 992, we'd only dipped to 997, and we started coming right back. And one of the things I said was that I'd be worried of this, or not all convinced. I would have been a lot more convinced if we'd shoved it way down to about lower 880s, like 882. That would have flushed out some longs, as I mentioned yesterday. I said in the FX Daily webinar, probably have some longs that have their stops just under 10, maybe at 995, maybe at 989, 87. Thinking if you're long, man, I got to throw in the towel if it gets below 885. That's got to be it. And that would have got us down to about 882. And then maybe you might have even got some people that were brand new short saying, oh, man, there's no doubt about it. We're going down to this target. And then we could have popped up. So us just barely dipping, literally 3 pips below 10 wasn't really enough. So we come back, and you can see here, now here we are pressing lower. So we'll see how this goes and plays out. But to me, that's kind of key right there. Obviously, but we also saw Aussie dollar going to take its dip. We know how that's been, weaker. So we're going to we'll get into those. And we'd seen also the cable. Yesterday we had, we reiterated that we started out the week, our analysis, we were looking for, we're actually looking potentially for a move even lower. But the number, remember we had this here saying the area of focus, you see that last paragraph or last sentence, whatever you want to call it. The key level of focus will be the pivot 2980 with bears eyeing to run to 2898. Well, you can see here they came down to this pivot, and this pivot's been around, I think I mentioned yesterday, since Moses crossed the desert. I mean, it's been around for a long time. And that's where they went to. They went down to the pivot, then they turned around, I guess you can call it rallied off of it. Yeah, I think that we came up off of this, we came up about 50 pips. That wasn't bad at all. I mean, but you can see here, and I did the analysis, the bears are still obviously in control. I mean, like I said, when you look over what happened over the last 2 weeks, failing up here at this 3080 level, and then Friday, like it looked like we were going to do it. I mean, it's like we already came up to 31.66. And you know, when the data was released on Friday, we were actually doing the analysis, and we just clipped over there above 31.66. And right out, almost as soon as the data came out, we started sliding. We were already down 30 pips, and from there it was down, down, down. So anyway, bear with me. So it's kind of where we stand with those. Pace a little bit weaker, obviously, with the moves that we've seen here in equities. And boy, what a run we've had. Let me go in and pull this up here. Bear with me. So look, man, we made it all the way up to here to 32.90. See, right there. Look at that. I mean, holy smokes. And I was talking to Greg in the chat room late yesterday afternoon. Nobody was around at the time. We were talking about the S&Ps, and you know, every now and then I go and start dancing around in those things. But yesterday I thought it was a good opportunity, but I thought the moves were going to be where you could ultimately get run over, potentially, depending on when you step in. And when I trade S&Ps, I got to just keep my eyes just focused on that. Pretty much trade oblivious to everything else. But if you have the opportunity to follow sell puts, he's been around. He's one of the very first guys I ever followed. He made some great comments yesterday in the Asian session about that. And that's one of the things I was telling Greg was that, you know, you're going to have to use very, very wide stops, or you can easily get run over and still be right. You know, so boy, did we get some good runs in the S&Ps though yesterday. Oh, that's another thing right here. Is I am surprised. Look at this dollar yen. Wow, I thought we would have been up. We would have challenged up to 932. Actually, I mean 934. I had a limit working there at 32, and we've actually. Blake came in and shorted. I was doing my analysis when I saw it. He'd said they shorted, and I think we were already down to 905. I was really ticked off. We came back up, and even though the S&Ps made it up into the 990s, we still didn't even get up here to tag up to at least 30. So I don't even get this dollar yen. I did do some okay trading yesterday in this thing, even though it was very tight. I thought pretty confident in here. And but anyway, that being said, so that's been kind of the moves right now. So we'll see what happens or what transpires. But let's go and move on to the news. Bear with me. Like I said, slow of foot this morning with the stupid internet and me switching things around. Thank goodness I keep that backup internet. Anyway, the Australian dollar gets sliver of support as inflation firms. The Australian dollar edged higher from 3-month lows on Wednesday after inflation data proved just firm enough for investors to price out almost any chance of a cut in interest rates next week. The Aussie inched from a trough of 67.37 touched on Tuesday, but was still nursing losses for the week so far. Immediate resistance at 67.75, and it needs to get back to 68.30 to repair the technical outlook. The New Zealand dollar was stuck at 65.40 and just a whisker from a 2-month low of 65.21. Both currencies have been hit hard by the scare over the coronavirus, which is likely to crimp tourism from China and perhaps even its demand for commodities. With Chinese markets shut all week, investors have been hedging China risk by selling the Aussie and the Kiwi liquid proxies for the yuan and global commodity prices. So there's only a limited relief for the Aussie when the data showed consumer prices rose an annual 1.8% in December quarter, just topping forecasts of 1.7%. Core inflation stayed stuck at 1.6% and marks its fourth straight year before the RBA's target of 2 to 3%. Still, the market had been braced for an even softer number and reacted by paring back the chance of a cut in the three-quarter cash rate when the RBA meets on February the 4th. Futures slipped around the curve to imply an 8% probability of a February easing compared with more than 50% a couple of weeks ago. March was just now put a 32% chance, rising to 58% by April and 84% by May. The pickup in inflation in Q4 should be the final nail in the coffin for hopes of a February rate cut, said Ben Udi, economist at Capital Economics. Even so, we think economic activity will remain subdued in 2020 and expect underlying inflation to decline again before long. And then lastly, the overall picture, which isn't still too much. Bear with me. So riskier assets, riskier currencies steady as investors assess China virus fallout. Riskier currencies steadied on Wednesday, and demand for safe havens ebbed as investors waited for more news on the likely economic damage from a virus outbreak spreading from China. The offshore yuan, heavily sold in recent days, was marginally stronger at 69551 per dollar. Firmer than expected inflation figures supported the Aussie dollar from Tuesday's 3.5-month low. Japanese yen was a touch weaker, though with most moves slight across the board. It is clear traders remain on edge. The way risk is trading, people are saying that perhaps we reached the peak worries, peak fear, said Chris Weston, head of Melbourne brokerage Pepperstone. But it's got an uncertain feel to it. It's difficult to sell the yen or the Swiss franc in an environment where the news flow is still getting progressively worse. And we're not really fully able to price risk. The newly identified virus has created alarm because it's spreading quickly, and there's a little known about it. The death toll rose sharply to 132 on Wednesday, with nearly 1,500 cases for a near total of 6,000 cases. The yen was a touch weaker at 109.20 per dollar. Mainland Chinese markets are shut for Lunar Year this year. Elsewhere, the euro stood at 10.13, having hit a 2-month low of 9.98. Yeah, look at that, 9.98. And I'm saying 9.97. I thought I said 9.97. That being said, like I said, you barely went below 10 by a whisker. Sterling was steady at 30.18. U.S. Federal Reserve meets later on Wednesday, expected to keep rates on hold with a wary eye to the economy. But some think a mere mention of risk from this coronavirus may spark some speculation the Fed could dole out more stimulus in the future if the U.S. economy is hit by a fallout from the outbreak. It's not necessarily the virus per se that is a problem for the world's economy, said Jeffrey Halley, senior market analyst for Oanda. It's self-feeding the negative feedback loop in economic activity and thus growth. It creates a worst-case scenario dragging over the next few months and could even knock the Federal Reserve on the trajectory. So with that, let's go and move into the analysis. Bear with me. Let's get the let's take a look here. Well, we do have Italian producer prices coming in at the top of this next hour. We did have some data loans to household that came out, but the real key is going to come in the States, and we still have FOMC later today. 8:30 Eastern, we're going to have retail inventories, or wholesale inventories, I should say. And then at 10 a.m. Eastern, we do have pending home sales. And of course, at 2 p.m. Eastern, FOMC. Tomorrow, we do have unemployment here in the Eurozone. Well, at least German. Oh, and don't forget, almost forgot, Bank of England. And also tomorrow, GDP. All of this may keep the dollar under a little bit of a bid. Let's go move into the analysis. Okay, so let's highlight this or expand this out. So the euro dipped sub 110 momentarily ahead of the FOMC before closing just above 1020 in another tight range. Resistance remains 1058 with support at 982. And we're going for that 982. This is that move I would have preferred. I mean, if you're bullish euro, and I thought about picking it up, not really yesterday, the day before on Monday, and a little bit I thought, but one of the things I was looking at was that we just simply stayed stagnant, and we just weren't, even when we dipped a little bit lower, we just weren't really being picked up, or it wasn't picking itself up. So I considered it yesterday if we had dipped down to 982 for a bounce. Because we do have FOMC today. That's 64. Trying to see if there's something right. Some good volume right there coming in at 71. Let's go with that. 71 right there. You can see the touches coming across here and here. Let's go with that. You can see right here, here, here. Could even push a little bit lower. Let's go with 970 right there. If we get a little bit of a dip, that may take us in. I think that's a decent area. We probably get some shorts to cover because it has, even at the same token, works the other way around. It's been dip, dip, dip. But we'll go with 970. It's 1058 is still going to be the same. Get a rally. It's going to fade against that. We're definitely still bearish. Let's go and move into the cable now. So cable found support at the pivot, 29.80, before rallying 50 pips into the close. Bears remain in control with resistance at 31.63 and support at 29.56. So remember that pivot, we had that yesterday marked off. So then the reason I mentioned that is because that's still support, but we can dip below, and here I think we could dip maybe as low as 29.56, and you probably see a little bit of short covering come in. 30.63 is going to be resistance. Bear with me. Yeah, 30.63. Now I'll show you what I'm coming up with that. I'll just drag this over here, right here. So 30.63. If for some reason we get a move up in here, that's where I'm looking for it to run out of gas, right there, 30.63. If we get that, let's say we see the dollar pair off, whatever. Let's go move in now to the Aussie. Now, what we've had, which was yesterday, I think I put in there was I wasn't going to see any changes, even though we had data coming out, was 67.08. And that's still keeping the market in check here. On the dip side, we go. There, right there. We're going to go and keep that for support on the stretch lower. My concern is, even though that may keep the RBA in check, the key thing is that we're below this trend line. And we broke the support. And as I mentioned, now we've broken below this trend line. It's going to keep the pressure. And so to me, that's why I like this area right here. And I don't like it, but I'm saying this, I think we can come down to 67.08. And still there's that risk. What if the RBA, in light of everything that's gone on and the impact from the coronavirus is impacts him? Well, it's more of a direct impact. That's what I'm trying to say, is that they could still maybe pull something out of the hat and say, well, we decided to cut because we're going to be proactive. You see what I'm saying? So I think there's still the risk for us to move lower. So we're going to go 67.08, and on the upside, 67.86. We're definitely going to keep that in there. So right here. Looking here with the Kiwi, and I put on here there's no changes because you can see we're still within the prior day's range. And we just dipped below 65.44. The key, though, is going to be this breakout level right here. And can we slip? And potentially, if the Aussie does slip down there to those levels, looking at closer to 67 cents, that may allow this Kiwi to be dragged down. I think they'll gladly buy this on that dip, but this is the key level. So if you were, let's say you were thinking, okay, I want to buy today, I'm gonna buy today because I feel good about it. Then you know what your risk level would be if you got to close below 64.93. Really, technically, you always want to see two, because you can always gun the stops and it finishes weak, and by the time people get stopped out, we kind of hold on, we start to move from there. Have to be two consecutive closes, but just below here there would be key, which would be 64.81, but 64.93 is the breakout area. So that's still going to go and remain, as well as on the upside 65.91. Let's go and move into the dollar CAD. So the dollar CAD paired back from its bias chart resistance of 32.07, which remains key for the bulls to close above. Support is going to be 31.36. So, yesterday when we were doing the analysis, we actually were right there. I think we were, at the time, we were trading at 32.06. And I think that, and you can see we got turned off. We said, you know what, we're going to keep it anyway. That's the level we're going with. That's one we have on the 2 hour. That's it. And we stayed with that, and you can see the market did go on pair back. Not a whole lot, but it did. Support is going to be this level here, 31.36, right there. If we pull back, so we've got 31.36. And resistance will remain the same right there at 32.07. So the peso pared back among the run-up in equities. Support is going to be 1870 with resistance at 1886. So it looks like that's where we've actually gone down to this morning. You can see that right there. Looks like we tagged it just right there. Well, 1869, 835. Well, yeah, 1870. So that's our support. And resistance is 1886. You know, as much as equities have come back, I'm surprised we haven't at least challenged closer to 65. We haven't. It's actually holding up pretty well, which is surprising. We'd held up fairly well over the last, 7 days or so. When we were dipped down here, I thought that we would have seen a far stronger short covering rally closer to 1905, and we didn't. We've come back down, but we're still holding up relatively well. If we were to see I was going to say an extended move, but that's probably too much to ask for this S&P. But I'm saying if you were to see a lower move with some duration as far as time, then this would probably be open to a decent little bit of short covering, which could take us potentially up to about 1912/14. But for right now, staying within a tight range. So it says the dollar yen remains bid on Tuesday as equities rallied. Resistance is 934 with support at 898, followed by 870. Well, this was a head scratcher. I thought that I was going to have the opportunity to sell this thing with the Apple earnings because I thought the Apple earnings are going to come out good. It's going to punch up the S&Ps, which it did. And then I thought that would send the dollar yen to around the 19. I thought it'd probably make it up to about 937 or maybe. I was happy to go and sell it around. I think I had the limit was at 34, 33. But anyway, that being said, and here we are down here. And the S&Ps, they're coming off a little bit, but they're still 32.82, and they've been as high as 32.90. And this thing has not even been able to get above even just above the pivot. We're going to go and keep that nonetheless. The thing I'm just going to keep yesterday's 918 because the S&P's made it up to what, 32.90, and we couldn't even get past 27. So what the heck's going to go and push us up to 32? So we're going to have to put the resistance here at 18 now, or keep it. And on the downside, we were saying the 898. I thought we were going to see a lot more follow through. So when we look at this on a 2-hour basis, we'll just go right here on this low here, which is 80, called 882. So the cash dollar index found resistance just above the bias chart resistance at 98.11. Remember, we had 98.11 yesterday, and I think we got up to what, 15 or 16, something like that. Bulls will generate a new leg with a close above 98.40. Okay. Support is going to be 97.80 followed by 97.42. So it's Wednesday, but tomorrow, if we get this weekly close above 97.89, that's what's going to be key. This big old pivot is going to be very, very key. And this one really goes way, 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 way back. You see that? This goes back to 2017. So if we get a close, if we close a week above it, it's really going to open the door for them to move higher. So that's to say it's going to be interesting. If we got above 97.40, 98.40, that's when we'd be able to go in and really scoot to a new leg. It just even a daily close. That's really going to gun the stops. But in the short haul, it's going to be 97.80 for support. We could probably find resistance a little bit closer, maybe around 98.30. We came right into that 18 right there. And I guess here you can see right there 98.32, but you could punch up this high right there. You can see there 98.40. We close above that. That's it. Game over. We're going higher at that point. No one's going to go in and question that thing at that point. And then, so that's going to be key. But we'll see where we are at the end of the week. It's the Bulls' game to lose because they've got the momentum. All they have to do is close above 987.89 on Friday, and we're moving up to another leg. We've already opened the door. Now we've basically solidified that, and we'll allow that. But like I said, key today is going to be 98.40. With that, we're going to move into the cross rates. Well, we've come through some levels here. We talked about that. Obviously, we came down here to the 72. That was I won't say no surprise, but we came through here. We came down here to the 71.47. I thought this is where they're going to find some support. Initially, they did when they got down there, but we still kept pressing. And boy, doggone if we didn't make it all the way down to 71. And this was a pretty good move from down here. I mean, from up here, just, blowing through some levels. And we've got some very key support here at 71 even. And we have it marked off as 71.02, and we're going to stick with that. And then on the upside, and the short haul would be right there at 71.52. This is where the real resistance comes in, right there. Let's stick with that. You see right here, the open here and close, 71.60, 71.60 there. So we're going to go with that, 71.60. You do see that again. He's back on this Kiwi challenge, so this would be the risk. Matter of fact, look at it that way. If you were short, that would be your risk level. Looking at that capacity. Let's take a look at this on the daily back. We talked about this because remember, we're still in bullish mode. And it is still in bullish mode as long as we can stay above this area right here. 2 consecutive closes below 71.02, and we get the bulls losing. Doesn't mean we're going full on bear, but they'll have lost that momentum. Let's go on now to the euro yen. Well, we're hanging by a thread. There's no doubt about that. Look at the trend line here. Look at this key level here. We got below it here. We rallied up. Now we're down. And the euro is certainly vulnerable. Now we had 1970 as our support. And that's still going to remain the same. We'll just see if it breaks it. 1970, and on the upside, right there, you see it? 2043. 2043. We see this yen start to slide. That's where we can go to. Let's go into the euro on. Well, this was key yesterday, and the 63.41, and because when we had that even for Monday, I believe it was too. 63.41, downside 62.95. We're right there. Right there. 62.60. It needs, if it gets beyond that, it's gonna has a potential to break lower, and kind of surprising, especially consider the weakness of the Aussie. Although, like I said, we talked about this before. It's I'm weak. No, I'm weaker. But we'll go with 62.60 on the support. And let's go with Euro Kiwi. Well, we're holding our own here. I'm talking about right here where we're at. Almost like a little bit of a gravestone doji here. And there was on a little bit of a rally and came into some resistance. We're just, I don't want to say just marking time, but we're just sitting here. And the euro has its own problems. And the Kiwi has fared better. The only thing is it's impacted with the whole coronavirus junk. We're just trapped in a, I wouldn't say trapped, but we're just kind of sitting here in this very, very tight range. And really no changes. Yesterday we had 68.92, and that's kept the market in check. The high was 68.98. We're going to stay with that. And on the downside, 68.04. And you can see here the low was, what, 68.08. So we'll stay that, no changes on the Euro Kiwi. Let's go and move into the Aussie Yen. Boy, look at these ranges. It's just... these ranges, holy smokes. I mean, what was this? 36 pips, essentially. Well, it's going to be 74.02 here on the upside. And 73.25, remember that's the 50%. Can't even talk. 50%, so we're keeping that. We haven't made it there yet. We're just about, but not quite tagged it. And with that, let's go move into the guppy. We definitely have moved lower. Still in a tight range overall. We're just going to go with this low right here because there's some nice volume coming in right here with the open. Comes in here, and then we've got some volume. We're going to go with this for the low today as far as for support. 41.12. We're a ways off, but we can, like I said, don't forget tomorrow we have BOE. So let's call that 41.12. And there's resistance right there, 42.50, which was support. How crazy that was. It's gonna be 42.50. And you can see, despite the weakness, we still remain bullish, still holding up even though we paired back. Let's go move into the sterling odd. Yeah, this is one that I thought we were gonna rally up here, and I thought it was gonna be a great shorting opportunity. It just never played out, and we were kept pulling back, but I just thought we were gonna get this jump, and it never came to fruition. Just play it the way it is from the technicals and what we've challenged here, and that's gonna be right there. 93.11. And see this coming across this volume here. 91.95. You're just trying to make a little bit of a stab, but I don't have a dog in this fight, but I would not be fooled by this. I think the potential is still one more downdraft. Then, if you want to get long on a downdraft, you're putting the percentages a little bit better on your side. But with FOMC, and look, they dipped below 110, and the best they could do was what, 10.28, and here we are just a few moments ago, sub 110 again. You see what I'm saying? So you just haven't run the bulls out of Dodge yet. We need to take that dip to clean them out. And that dip, I think, would now have to take us below 980. I think we need to go about 972 to flush out some bulls. And speaking of 972, we've got support today at 970. Then I think if someone was short, they might say, you know what, I want to take some of this off the table. You get that. And then some people might say, you know what, this is a good area now to step in for the long side. And I'm saying you get that confluence, I would believe, where people would say, okay, I'm willing to take it on. I'm willing to. At 970, sure, I'll come in. But right now, I think it's just bulls are just hanging on, and maybe they've got their stops at 83, 80, 75. That's, I think we need this flush. We'll see what happens. With that, thanks for joining us here on the European crossover. We'll see you in the chat room. Have a great day trading.